Perfect. So, hey, Bob, I just wanted to thank you for joining me today. Just to let you guys know, Bob Flynn has been in the industry for now over 3 decades. He really knows what he's talking about. And most importantly, I truly believe he's probably one of the smartest people in the industry. So I wanted to give you guys some exposure to what he can do for you and how he can really solve a lot of our problems. All right, so Bob, I have situations where I've got a client who is basically house rich. All the money's tied up into the house. They have no deposit for another place, but they need to downsize. And I don't know, what can you do for them? What kind of programs do we have?
Great question. So Ravis thinks a little bit outside the box. So Ravis Purchase allows clients to actually sell their homes to Ravis. They'll give them 75, sometimes 80% of the value of their property, pay off their mortgage so they're not carrying any payments going forward, which makes them qualify easily either as a cash buyer or to get a new loan on the new house, and basically give them the remainder of the 20 or 25% or whatever that number is once they do sell their property. That way they can easily move into their new home, stay in their old home, market it correctly and not be panicked about selling it, make an offer without a sales contingency, which we know, John, is the kiss of death in this market.
Yeah. Now, what happens in the situation with this program? Let's say they do want to go through the program, but they haven't found a house yet to buy. Would this help that particular client out as well?
They would, and they would only use the program if they needed to. So what it does, again, it allows them to be confident to move forward and buy their new home or look for their new home, knowing that they have this Ravis Purchase in their back pocket. Ideally, what they would like to do is find their new home, sell their existing home, not use the program, and just move forward with their 2 transactions.
Yeah, that sounds really good. And what about a situation where, believe it or not, in this market, we're still seeing multiple offers. So we had one on our team just yesterday. And what kind of programs do you have to make them look cash rich, and how would that be implemented?
Great question. So we also have a cash purchase program. So it allows a person to actually have Ravis purchase the home for them. It's called a cash bid. We give them a letter of credit for the entire amount of the purchase. We close on the property and then let the client buy it from us weeks later or a month later, whatever is convenient for them. It allows them to go over and above what any competition is making offers for because they are a cash buyer.
And with that program, being a cash bid program, do they have to use that, or do they have an option? If they don't want to use that program for whatever reason, can they just pay a small fee and then get
correct
a regular mortgage?
So the ideal situation would be for them is to not lose out to another cash buyer or to a higher offer. So being a cash buyer means that they're coming to that closing table. It's guaranteed to the seller, which is all the seller cares about. If they decide to actually get a mortgage at that time, as long as we have access to be able to do an appraisal, the seller shouldn't have an issue with that.
That's good. Yeah,
it's a real good program.
Yeah. And one last question. As you know, we're in a very funky market right now with rates going up and price stability a little bit, depending on the town, it can be in many different spots. What would you recommend to a home buyer that kind of needs to make a move, sees these high rates, sees some prices dropping? Are there any kind of programs in the market right now that you think would benefit them? I mean, what type of a mortgage program would you put somebody like that into if you think the rate's going to go down in a year or two?
Yeah, I'm confident that interest rates are coming down. And there's an old saying in the industry, I wish I created it, but I didn't. You marry your home, but you date your rate. Look, as soon as they get inflation under control, we're going to see rates come right back down. They're going to go from quantitative tightening to quantitative easing. They're going to be fighting a recession if we're not already in it. So they have to lower rates. So for a client, there's options for them. So my thing is if I'm a buyer, this is a perfect time to buy. I would rather have, $6,000 higher mortgage payments with a higher rate for a short period of time, knowing that I'm getting a $20,000, $30,000, $40,000 reduction in a value on a property. Because I'll tell you what, as soon as rates go higher, when they go lower, property value is going to go up. So
Yeah.
I would rather have the savings on that house long term versus a short term rate, which I know I'm going to be able to refinance. But to answer your question, John, I digressed a little bit. We're going to have programs that allow them to do buy downs, right? So we can do a 2-1 buy down. So if the rate is currently at 7%, they can get 5% the first year, 6% the second year, and then the third year goes to market rate. And it gives them the ability to have those lower payments and take advantage of rates when they do lower and they can refinance, so they're not feeling the sting up front.
Yeah, so basically buyers don't have to be concerned necessarily about making a transition because you have a whole bunch of different programs that are going to be available for them to make the whole process nice and smooth and easy.
That's correct.
That's great to
correct.
hear. Thank you, Bob.
You're welcome, John. Thanks for having me.